Certainly the market seems to like it from what we're hearing from analysts, and the Aussie initially got a bit of a lift from it.
It was an important piece of data coming out of China today, because what we did see was a significantly higher level of inflation in the month of February, where it was up around 3.2%. But this month it dropped below expectations, coming in around 2.1% for the month of March, which was below expectations of around 2.5%. And the material stocks have really benefited from that today. They've bounced nicely. Unfortunately, it doesn't really make a dent on some of the falls we've seen in some of the commodity share prices over the past couple of months or so. But certainly some of the China data coming out this week could be the catalyst for a bit of a kickstart and a bounce back in the materials space. We've had the inflation data today. We've got the trade data tomorrow. Now, this inflation data, of course, when it did rise significantly last month, it really spooked the market in terms of the Chinese tightening policy in China to slow down the property rises, the rises in food prices, etc. So it's good news for the market today, as it does give them a little bit of breathing room. So possibly indicating that bounce was a bit short term, maybe influenced by the Lunar New Year holiday over in China. So at the moment, the material space obviously really suffered after some of that data coming in January and February, weaker than expected, though I think the market is a little bit short-term focused in its view of China at the moment. They're very focused on these property curbs in the market, which will actually probably benefit the economy longer term. So very short-term focused, the market at the moment. And I think as 2013 continues through, we'll see the Chinese data improve and the market come to the realisation that probably the fears and concerns were a little bit overdone at the moment, and we'll probably start to see some of those commodity stocks come back in the second half of 2013.
Okay, that's interesting, something to watch. Alumina having a great session. It's up over 6% after Alcoa's reported its numbers.
That's right. Alcoa kicked off first quarter earnings season for the US last night. Now, the ASX listed Alumina has risen over 6% today, of course. Importance being the 40% stake in the joint venture there. So the results obviously affecting Alumina's share price performance today. I mean, on the headline, the earnings look quite good. We saw a rise over the previous year in terms of the earnings, but I think the sales result was a little bit disappointing. It fell more than what the market was expected, and it follows a little bit of a trend in what we saw in the last quarter of US earnings season, where profits generally surprised to the upside. We saw some good profits beating expectations, but on the downside we saw a lot less sales results actually beating expectations, just highlighting the fact that companies have done very well to improve efficiency and cut costs, which has flowed through to their profits. But demand's looking a little bit questionable in the fact that sales really not meeting expectations in terms of the market. I think that's what we saw again in this Alumina result today, and Alcoa result last night. And commentators often say that it's a bit of a bellwether in terms of the US economy and earnings season in general, but I think that bellwether status has eroded somewhat recently. It's certainly very leveraged towards a single commodity being aluminium, and though it is widely used, we've seen a lot of softness in the aluminium price recently, because really the output in the aluminium market has far exceeded the demand. So we've seen a surplus of aluminium, and that's put pressure on aluminium prices. And unfortunately for ASX listed Alumina, that's probably going to continue the softness in aluminium prices through 2013, 2014. Probably won't see a strong bounce back, though demand within the car making space and aeroplane space appears to be quite good for aluminium. But I think in 2013, 2014, Alumina certainly will be concentrating on cutting costs, because margins have been coming under pressure a little bit.
Just finally, got to ask you about Ruralco. It's fallen by more than 6% on that profit warning given late yesterday.
That's right. After market yesterday gave a profit warning saying that the profits could be down as much as 70% on the previous year. We've seen the stock price fall over 6% today. Underlying earnings looks like it's going to could be around 50% lower on the previous year as well. And this has been seen really driven by lower live stock prices, as well as adverse weather conditions. It actually follows a couple of other profit warnings we've seen from agribusiness companies recently, most notably Elders and New Farm, and just highlights the tough conditions that these companies are facing at the moment. If you have a look at some of the prices in that market, cattle prices are down around 15% year to date, lamb prices down around 20% year to date. And the drier than average weather, particularly on the east coast of Australia, has affected their merchandise sales, products such as chemicals, for example. Now, if we look at Ruralco, they did acquire a 12% stake in Elders, another agribusiness company, back in 2012, and they do own Elders Rural Services, which they have put up for sale. Ruralco initially put in for sort of a merger with this particular business, but now it is for sale, and it actually gives a bit of an opportunity for Ruralco moving forward, because these assets would complement the business quite well. If it did purchase them, it would expand their footprint in their store business, so that would be a positive. Significant cost and revenue synergies there. But I think overall, for a company like Ruralco and many of the agribusiness, in the short term they're facing a tough environment. Longer term, Ruralco in particular looks pretty well placed within the market.
All right, great to get that update from you, Tim.